What's up, people from your freaking YouTube, our user. Hopefully everybody's great, and yeah, let's look into the charts, doing whatever we love doing. So first of all, I'll start by getting rid of all these that I'd made before. Yeah, and let's start it from zero. So we have this clean chart of ours, and from this chart what we can see is this is the weekly time frame, and generally the trend that you can see is we have this bullish price action here, and it changed to bearish. Let's see, because this bullish we were making higher highs. We have this high, this higher high, and higher lows. This low, this a higher low, a higher high. Yeah, we had this bullish price leg, or we were in a trending in an upward trending market. But later on we had this low being taken out. We had a lower low that took out these lows, confirming to us that we are now shifting from a bull market to a bear market, right? So we can see these liquidities were being grabbed over here, and then the market retraced, because what we know is that the market is being driven by two things. We have, number one, liquidities, and to those who do not know what liquidity is, above every high and below every low we have liquidities, but above highs we have buy side liquidity. So above these highs we have buy side liquidities, below these low we have sell side liquidity resting below. Below these lows we have sell side liquidity resting below. Here also, here we have sell side liquidity as well. Above this high we have buy side liquidity resting there, and over here we have a buy side liquidity. So if you can spot whatever I'm saying is, or if you let me use this tool for me to elaborate this clear. So if we are let's say we have that low, we have the high, we have the higher low, we have a higher high. So whatever is resting above the zone here we have a buy side liquidity, whereby we have buy stop, because people generally have are in a sell. Some people have entered in a sell, and where do you think they place their stop losses? Their stop losses is above this high. So buy stops are whatever we refer to as buy side liquidities, and below here we have sell side liquidity, or in another word we call them sell stops, because people want to buy at this low. So if they buy here, definitely there's, or they buy around these zones, their stop loss will be below this low. So the stop losses are what we call sell side liquidities. Okay, so yeah, so above here we have buy side liquidities resting there, below here we have sell side liquidities resting there. So, and once we see liquidity being grabbed, for instance this liquidity that was being grabbed up by these highs, we always have a retracement. Okay, we have a retracement lower. To which levels? Okay, first of all, as I was saying, is we have two drivers of the market. We have a buy side the liquidity, sorry, and also we have the imbalances. So let's try to look for imbalances. What do we call imbalances, or inefficiencies? Okay, so when we have a candle like this in this bull price leg, we have this candle number one. Where is the high? The high is around that zone. Okay, I guess let me remove there. Around this zone, this candle's high, we have that high, and this candle's low. We can see we have a gap there that has not yet been engaged. We only have a candle in between, but we have no wick. Okay, let me make it more yeah, that low from these candles high. Okay, guess you can spot yeah, yeah, exactly. We have these candles low, these bull bearish candles low, and also these bull candles high. Okay, so we have no body or wick that has, or these wicks have not yet overlapped. Okay, so this whatever or what we call imbalances in the market. So for instance, if we have a bull imbalance, we call it a BC, whereby it's a buy side imbalance, sell side inefficient. So we don't have sell side being offered here, so the market traced higher, but also this sell side must be offered, so it was offered on this price leg over here, as you can see it over here. So this price over here now, whatever you are calling an imbalance is no longer an imbalance, because we have buy side or buys being offered, and also sell sides are being offered on this price leg. Yeah, so that's what we call imbalances, and those are the major drivers of the market. So once we've seen this liquidity being grabbed, we saw this retracement, then continuation higher. To which levels did this market retrace to? So we can use our Fibonacci tool or our gene box to see to where prices are retraced to. So over here, what we can see is after these liquidities, this liquidity, buy side liquidity above here was grabbed, the market retraced. Because we were in a buy, we cannot buy, or we do not buy when prices are expensive. Okay, using this price leg here from this low to this high that took our buy side liquidity, uh, we can draw this gene box, or we can use our Fibonacci to establish our premium and discount levels. So I guess this we have this zone. I guess at the midpoint of this gene box is the 50% of this price leg from the low to the top. Okay, above the 50 zone is the premium levels where prices are expensive, and below the 50 level is the discount where the prices are cheaper. And let's take the market analogy. When you are in the market, when should you be buying your stuff? Or maybe you went to a cloth mm, clothing market, right? And you find that price is higher. Okay, will you buy if the prices are high? Okay, you will not buy that cloth if the prices are high, so you will bargain for you to be given a discount. Okay, so we buy when we are in discount. When you have been given a discount, that's when we buy. So also the same applies in these markets. Okay, so prices retraced higher, then we had this retracement. We cannot buy when the prices are in premium, meaning are in expense, are in an expensive zone, but we want to buy when we are in a discount zone. Okay, so the market retraced to this discount. And what can we see where did it react or from? So we have this something we call an order block. So it reacted off this order block here. It tapped into the order block, then from which we had these buys, and rallied higher, creating imbalances. Also an imbalance over here, this candle's high and this candle's low, cleared the buy side liquidity, then retraced lower, right? So yeah, that's what has been happening on the weekly lower. And after as that's what has been happening. We saw this retracement lower created a market structure shift whereby the previous low was cleared. Okay, you can see this low here has been cleared around this zone. We had this displacement lower. Also this buy side has been grabbed, so this price action here is we can take this price leg and also estimate where premium levels and discount levels are. So from the low of this price leg to the high of the price leg, so this zone there, yeah, yeah, guys, these also these for me it differentiates, or it distinguishes for me the premium and the discount levels. Okay, so we have this price action here. The buy side liquidity had been grabbed. Over here we have this sell side also, liquidities have been grabbed, so we are expecting a retracement higher. And to which point are we expecting a retracement? Okay, because we have been market structure has been confirmed, right? Here this candle, we had a displacement below this low here, so this is our number one site, or our number one confluence for we are heading now lower, because the low has been broken. If we were to be in a bull market, we couldn't have expected or anticipated to see this low being taken out, but it has been taken. So now we are reversing, or we are now shifting from a bull market to a bear market. So we had these lower, cleared the liquidities, and once liquidities have been grabbed, we are anticipating to see retracements. Okay, so we had this retracement, and because we are in a sell model, if I go the same analogy of the market, if myself I'm a seller, if I go to the market, I will not be selling my stuff when the prices are cheaper, because I will not make enough profit, or I'll be not profiting, or maybe I will be undergoing losses because I'm selling my stuff at cheaper prices. But since I'm a seller and I want to make my profits, I will wait until prices are higher. Okay, and when are prices higher? Prices are higher in premium levels. Okay, so above the 50 zone is whatever we call the premium, when prices are expensive, and below the 50 level is what we call the discount, where prices are cheaper. So from this price leg, I want to see price retrace to discount, to premium, because I'm in a sell, then from which I'll be looking for my sales. And as we can see here, now we are price tabbed into discount, but we have two things that drive the market. Okay, we have number one, we have buy side liquidities, both buy side and sell side, and also we have inefficiencies. So if we use this price action here lower, let's look for BCs, CBs, I mean sell side imbalances, buy side inefficiencies, meaning we have imbalances on these bearish price leg that are lacking buy side that should be offered. Okay, so over here, this price leg, I cannot see an imbalance, but we have liquidities. So liquidities above every high, every candle's high, we have liquidity. So liquidity around the zone that is above premium. Remember, let's take back the gene box. So we must wait for until price has retraced to 50 level, but to which driver of the market is it heading to? So we have these liquidities above here, so we can see how the liquidities were grabbed, and then we can see these reaction off, and I'm bearish for Euro USD for the next weeks. I want to see price retrace lower to these lows over here. So it reacted off from these buy side liquidity, and then we can see this retracement lower. Okay, also because we are in premium, we want to sell, we can use also from this high to this low, we want to see price go to discount, retrace to discount, and yeah, if we might have a pullback again, then to premium, then we continue selling. I guess you are understanding me but let me make it more clear. But because price can retrace lower, okay, hit that order block, or maybe grab these lows, but we don't want like market cannot go straight lower without retracements. Okay, so this liquidity can be grabbed. Again, the market will retrace using this price leg from this low to this high, then the market will retrace to premium, okay, then also continue lower. So that's how we use a premium and discount. But for now there's no need, because we had already tabbed in premium using this price leg. So we are bearish for euro USD. So I want to us to look what happened last week, okay, and because this week we're also anticipating lower prices. We can see how this candle closed. We have this imbalance, this candle's high and this candle's low. We have this imbalance here. It was a buy side imbalance, sell side inefficient, meaning it was inefficient of sell side, but we can see sell side has been offered. Now it's balanced. Now we can call this a balanced price range, right? Yeah, so I want us to go to the lower time frame, because I have briefly told whatever I'm anticipating these weeks. I'm bearish for these weeks, and generally for DXY bullish, and GBP, GBP USD, also pound USD, I'm bearish, because they are correlated pairs, right? So yeah, so going to the daily time frame, what we can see is we have these rally higher. This is the buy side liquidity we were talking about. It grabbed it, rallied higher, grabbed these high too. As you can tell, this candle, this bear candle high, then we had this retracement lower, and once the liquidity had grabbed, then we have this retracement lower. Over here we can see this high. We said above every high we have liquidities resting there, so we can see liquidity above this high. Market rally lower, creating a swing low, rallied higher, cleared this liquidity, rallied higher, creating a swing, rallied lower, creating another higher swing low. Then the market retraced higher, clearing these liquidities. Then we have this retracement lower, clearing these sell stops or sell side liquidity here with displacement. And over here, what we can see is the market created a market structure shift. Now we had this bull candle that now is acting as an order block for this price, because we generally want to see lower prices. It will act as an order block that will support, or as a resistance that will support price lower, okay, that will resist higher prices but support price lower. So it's on a Monday, and I want to see and want to reflect on what really happened on Monday. I guess we can see on Friday we closed bearish, so we'll be heading to the 1 hour chart and analyze what happened today, okay, because then we finish this video, then some other time we will also look at it. So today is on 11th. I want to mark at 11th at 12 a.m. yeah, there is it. I guess you can see my line there, and what you can see is and also I want to mark 12 a.m. okay, with 12 where we had our opening price. Yeah, so this is our true day open. I guess I can make it red. So remember, these are true day open, because if you're in a sell model, we want to be looking for entries above the open. If we're in a sell model, or if we're in a buy model, we want to be looking for entries below the lows, right? Yeah, so we can see 12 a.m. and what happened today is we had these buy side liquidities resting above this zone. These are this buy side liquidity resting around the zone. We can see how the market did open here, rallied, creating a high, never took out these buy side liquidity here, rallied lower, creating a low. Then at around during new London session, we had this retracement higher, came and cleared this buy side liquidity. Okay, we cleared this buy side liquidity, then we had this retracement lower. Okay, we had this retracement lower, cleared these lows, but created relatively equal lows here, then rallied higher. So to some extent, we shouldn't be as traders, we should not be uh, targeting lows and highs. Okay, because we can see here this low wasn't grabbed. Today I was in this market, but market retraced because I took partials. That's why I did get out of this trade with a profit. But if I didn't have taken my partials, then my SL, because I could have trailed my stop loss, it could have been hit. That's why we shouldn't be chasing highs and lows. I recommend for fixed risk to reward. That's better. So what happened is this buy side liquidities above here was grabbed, and you can see now we are above the the daily open, the true day open. Now we can be looking for conferences to go lower. So because I'm a New York trader, I will wait until around 7 a.m. 7 a.m. for my entries. I'm a New York trader, so one thing I could want to see is a confirmation. I want to see a clear market structure shift. I don't want to see imbalances. I want to see everything balanced from before my entry. So after the liquidities had been grabbed, we can see this imbalance here. It lacks sell side liquidity. Sell side was offered here, then created a swing low. The market traced higher. Let me make these because we want to see the, let's make it bluish. Yeah, now this is our time, our New York time. We've seen this liquidity being grabbed. We've seen the market close below this fair value gap, or this imbalance. Okay, and now as sell side has been offered, we've seen a swing low form. Then later on we have this displacement with displacement of this previous low, so whatever we call a market structure shift. Okay, so we want to see these act as an order block. Okay, want to see these act as an order block. Yeah, that's our order block. It should prevent prices from going higher. So market rallied lower, consolidated a bit, rallied higher into our resistance zone or into our order block. Then we saw this retracement lower. So bullish candles inside a bear market are used to act as resistance. They should prevent higher prices. Also, we have this bull candle. We can see these market or the prices traced higher, then they were pushed lower. Then we have this consolidation, then retracement higher, then we have this consolidation around this zone. So as you can see is we have an accumulation. I'll be also talking about the power of 3. We have this accumulation, we have this manipulation higher, then the displacement lower, right? So this is what Monday had to offer. Sell side was grabbed, then we are expecting buy side liquidity or buy stops were grabbed, then we had this displacement lower. So that is it for today, and our entry, I guess, was to be at above the zone, above our opening time, because this is what we call the the Judas swing. This is what we call the Judas swing. We should be entering inside a Judas swing. Then if we are going lower, we go lower, and if we are in a buy, we enter below inside a Judas swing. So that is it for this video. Thank you for being around. I guess Monday was cool, played out well, and let's do this all day every day, and back testing all day every day. So thanks you for being here, and please like and subscribe to this channel. Until I get to see you again, please be safe. Take care everybody. Bye bye.